So in this session, we will be seeing how to prepare a vertical profit and loss account or a vertical income statement. Okay, so in the books of so and so, profit and loss account for the year ended so and so, or it is also known as income statement. Now, profit and loss account can be for the year ended or month ended or period ended or quarter ended also, okay, or 6 month ended, depends, right? It is for a specific period. Unlike balance sheet, which is as on a particular date, profit and loss account is for a specific period. Okay, now let's understand. You have particulars, working note, then current year amount, previous year amount, previous year amount. Okay, so in working note you have sales and operating income. Okay, note number 1. Then other income you have note number 2. Then total of income, then expenditure. In expenditure you have cost of goods sold, then office and administrative expense, selling and distribution expense, then exceptional items or prior period items. Then once you deduct all this expenditure, you will get profit before interest and depreciation. Then you have to reduce depreciation and interest expense. So you have profit before tax. Then provision for taxation for current year has to be reduced, so that you have profit after tax but before appropriation. Appropriation means distribution of profit. Then you deduct provision for dividends, and then you have a profit after tax and appropriation. Okay. Now we will see how to prepare a working note for each and every section. Okay, for example, income, sales and operating income. So working note number 1, sales and operating income. So you have gross sales, then you have returns, and then you have net sales. So returns is what? Your sales return. So your total sales minus sales return and your net sales. Okay, then working note number 2 is other income. Now in other income you have interest received, then dividend received. In spite of that, there might be some other income which is not your operating income, that is not in the normal course of business, some additional income. So that income is also included here. For example, if you are selling asset, profit on sale of asset may be included in other income. Okay. Now next, working note number 3 is cost of goods sold. Okay, so cost of goods sold is what? Your opening stock, then you have to add your purchases, then reduce your purchase return, less closing stock, and then whatever are the manufacturing expenses that you have to add. For example, manufacturing expenses will include all your expenses which are incurred inside the factory. For example, your factory lighting, okay, then factory rent, then your salaries, laborers salaries and wages, okay, then salary of a supervisor who is working in the factory. Then there may be some other stationary expenses which are incurred in the factory. So all these are part of your manufacturing expense. There may be some machine maintenance expenses. So all this has to be included in your cost of goods sold. Okay, then next is office and administrative expenses. So whatever expenses are included in your office, okay, or for administrative purposes, that is included in office and administrative expenses. For example, support staff salary. Support staff salary is what? Salary of your accounts department, finance department, HR department. All this is included in office and administrative expenses. Then there may be some office rent, office electricity bill, okay. Then there may be some stationery which is used in office. So all these expenses are included in office and administrative expenses. Then the next is selling and distribution expenses, point number 5. So selling and distribution expenses will include all your expenses related to your selling and distribution. For example, advertising expense, then there may be some salesman salary, then some incentives which is given to the salesman, okay, for selling and distribution. All this type of expenses are included in selling and distribution expenses. Then you have exceptional or prior period item. Sometimes what happens is, after the accounts are closed, irrespective of making a provision for expense, there may be some expense for which no provision is made. Okay, so what has happened is after the accounting books are closed, you get a bill of some previous year. Okay, and there was no provision made for that. So such items are included in your prior period items. Okay, so as they are not pertaining to a current year, it is included in prior period expenses. So although they are prior period, they need to be reduced from your income since you have to pay it. But since they are not pertaining to current year, you have to separately list it out as prior period expenses. Okay, the same will come in working note number 6. Or there may be some expenses which are exceptional in nature. Okay, for example, there is a loss due to fire. Okay, so that's not a recurring expense, right? It's an exceptional item, so it will be included in your note number 6. Okay, so once you do that, you have profit before interest and depreciation. Then you reduce your depreciation and interest expense so that you have profit before tax. Then you reduce your provision for taxation. After that, you have profit after tax. Then you will have provision for dividend, and then profit after tax and appropriation. So this is how you prepare your vertical profit and loss account or a vertical income statement. Now there may be some expenses, like as I said, your other income may include profit on sale of asset, right? So if there is a loss on sale of asset, so where do we include that loss on sale of asset? So there are 2-3 views. Either you can include it in your exceptional items or extraordinary items, or say if you can bifurcate that loss is loss on sale of machinery. Okay, then you can include it in your manufacturing expenses also. Or if there is a loss on sale of some office furniture, then it can be included in office and administrative expenses also. It depends on how do you want to present it. Okay, there are different views on the same, so accordingly you need to present such expenses. So this was about the vertical profit and loss account or vertical income statement. Thank you.